Today I have a special guest. So, first of all, I want to welcome you back to the Ambitious Legacy podcast. I'm your host, Sabine, the Purpose Lawyer. Thank you for listening and thank you for helping me be on purpose. So, guys, we talk here a lot about legacy and, planning for the future. And we know that legacy is basically what you've done and how that sort of impacts the future. So, I'm here with a special guest, Armando Pantoja, tall
How
guy
you guys doing
tycoon.
today?
Yep, tall guy tycoon. He is very well known and versed in the crypto, web, NFT, all things digital space. And he's Mr. Futuristic, right? You're all
Yeah.
about where things are going. So tell everybody like who you are and just like what you've been up to lately.
So what you say is 100% right. Armando Pantoja, call me tall guy tycoon. I'm what I call a financial futurist. We try to predict where the future is headed and be able to make money on those predictions. In techs, overall tech stock, tech stocks, cryptocurrency, financial technology, all of that stuff. We try to predict what's coming in short term, long term, super long term, and try to make some money by doing that.
Okay, awesome. So we have, and Armando's been on the show before, so I encourage you guys to go back and watch the episode so that you can kind of get a bit of his backstory that he shared with us. But Armando, it is a really crazy market. It's a crazy time. We've been hearing about this recession talk, which I guess we're in, right? We just kind of don't know where.
We're probably in a recession. I mean, the government hasn't acknowledged it, but we're probably already in one. The history will tell us that we've already been in one for like probably 6 months or maybe a year.
Okay. And which makes a lot of sense because I know that there's been a lot of like rate hikes and things like that, and they say that takes some time to actually for us to really feel the impact of all that, right?
Yeah, it takes a while.
And in addition to that, to that whole climate changing, we've seen a huge turnaround in crypto since the last time we spoke, and which was like almost a year ago, I think. And so what's happening in crypto? Like, can we still rely on this market? Like, what is the future of it?
Yeah. So I mean, like we were talking about earlier that we were in Dubai at a conference. And I one of my things that I spoke about was the market cycles in crypto.
Yeah.
Right now, and a crash was predicted, right? So the things we hear about FTX, all the news that we hear that's not what caused the crash. The crash was going to happen regardless. Okay. Whenever there's a crash in any market, you go back to 2008, that's when Bernie Madoff got caught. When a market retracts, then all the people that were committing fraudulent acts get exposed. That's all it was. Most people think that, FTX, the auto exchanges, all that stuff, that's what caused the crash. Nah, the crash caused those people to be exposed. And it happens in every market. It happens in real estate. It happens in stock market, finances. Anytime there's a big, severe crash, people get exposed, over leveraged, fraudulent acts can't be covered up anymore, and they get exposed. And that's what happened here, is that crash was expected, because crypto has a 4-year cycle. It's pushed up by what the Bitcoin halving. It's always has been since the inception of cryptocurrency. So every 4 years, 13, 17, 2020, and now 2024 is the next one. Okay. So there's an 18-month spike up. There's a lull period or maybe a retraction, and it's another 18-month spike. 18 months down, another 18 months up. So this was expected, and I prepared myself for it a while back. Took some profits, invested in real estate, kept the rest in there, and just going to hold out for the next 4 years. Oh, wow. But like I said, is that it's no biggie for me. But a lot of people who are beginners don't know that crypto is a lot more volatile than a normal stock or anything else, right? Your house, most people deal with their houses, 401ks, and it doesn't move 80, 90% down, 80, 90% up. But crypto, that's how crypto moves, because it's the market is not mature yet.
Right.
You go back to before 1929, the stock market moved the same way. Because
I didn't know that.
There was no regulations. There was no, and remember the stock market boomed from 20 to 29. All the flappers.
And there was a recession or depression, I think. Right. Yeah.
But the reason why everybody got into the stock market is because the gains were so crazy, 3-4
Mm,
times a day. Everybody got into it, right? Over 10
mm.
years, there was a crazy boom in the market. Then 29, it was a super crash. It was, Black Friday, all this,
Mhm.
all this stuff happened. Oh, it was
Mm.
Black Tuesday, sorry.
Okay.
All
I'm
this stuff
like,
happened. I'm sorry, I mixed up. People jumped out
okay.
of buildings, everybody knows the stories.
Yes, yes. Mm.
But after that, the government put in regulations so that those kind of that volatility could never happen again. And it never happened again. It took the public 30 years to trust the stock markets again.
Right, right.
No,
Because I remember a lot of people were even not trusting banks. Like they didn't want to keep their
yeah.
money in the banks and things like that.
For
Mm-hmm.
years, like, our grandfathers kept the money in the mattresses and stuff like that. It was all because of what
Mm-hmm.
happened in 29. When the government stepped in, they did some things called circuit breakers, regulations, checked to make sure everybody's legit. It decreased the volatility. So there wasn't these wild swings as
Okay,
they were
okay,
before. So
okay.
crypto is like the stock market in 1910, 1920. It's still
Yeah.
the Wild West. It's
So
crazy
question,
volatility.
you you had mentioned when you gave that speech in Dubai, you were saying how it's written into the code for it to have these sort of lulls, right? So if that's the case, then how does it mature like the stock market has? Like how does it mature where it's not experiencing these crazy spikes
It,
or
so what it is that because crypto is immature,
mm-hmm,
uh, like in stocks, for example, in the stocks, there are certain events that cause the stock market to move up and down,
mm-hmm,
and they're on the horizon. We know they're coming, but the stock market is so mature. There's so many actors, so many people playing in the stock market, so many experts that they know what's coming. They could predict for it, and
mm-hmm.
actually, the stock market would have events in the future already priced in today. Something
Okay.
that's coming up in a year, a stock will reflect it in the price of an event that's coming up in the horizon. Right.
Mm-hmm,
So there's not as much volatility because it's a slow rise up until the event happens. And normally there's a little drop off.
okay.
But
It's so
crypto is that a lot of people don't understand the halving. A few people do. Uh, and that's what causes the price to go up. And there's not a lot of banks and experts involved enough to keep that volatility from being crazy because of that.
okay. So is that like where they say, I hear like analysts talking about the stock market and they're like, it's already priced in, right? Like
Exactly.
certain movement is already
Yeah,
priced in. So the market doesn't get so shaken by
exactly.
different things.
So when
Okay.
something happens, like the next day, now it may be a small drop, small up. You're like, why did it go up 1,000%? Why did it go down? I'm sorry, why did it go up 80%? Why didn't it go? Because they already knew it happened over a longer period of time,
Mm-hmm,
right?
mm-hmm,
And
mm-hmm.
maybe in a year out. Crypto's not like that. It happens instantly.
Got it.
all of that trading that happens in the stock market over a year, in crypto may happen over 4 days. So you'll
Right.
see these crazy dips and ups and downs.
That makes a lot of sense. And you had mentioned, FTX and how there was a crash for like people who don't know what FTX is and what does that mean now? What happened with FTX? What does that mean for the crypto market?
So FTX was an exchange. It handled about 30 to 50% of all Bitcoin that was exchanged in the world.
Hmm.
So when the Bitcoin market crashed or crypto market crashed, FTX was found to be over leveraged, more or less. That
Hmm.
means that they didn't have enough money to pay off their users or pay up for withdrawals, all of this stuff. They didn't have enough money on hand. So when
Okay.
users started withdrawing money, they didn't have enough. So they start shutting stuff down and it cascaded through their whole operations. And it came to find out they had some bad loans, some fraudulent loans, double dipping in multiple companies,
Mm.
commingling funds. And it was a big mess, which all
Okay.
of that under a good market, all of that never would have been exposed.
Right.
Under
Because
a
they would have
bad
continued
market.
to be making money. Nobody's pulling their money out.
Exactly. So billions of dollars coming in, that covers a lot of crazy stuff. But
Right.
when you're but when the things get tight, it's not like that no more.
Hmm.
You have to be real businessman, and then a shady businessman or not so good businessman gets exposed. And
Right.
that's what happened with FTX is then, and the thing about it is FTX is an exchange and that is connected to a lot of other places in crypto because some people may
Okay.
use this exchange for liquidity. Somebody else may use this exchange to take out loans. Another company may use this exchange to do their exchanging of Bitcoin. So they were attached to a lot of players in the crypto market and
Mm.
it hurt the market pretty bad. But the
Right.
good thing is that Bitcoin was at about 21,000. It dropped to about 15.
Hmm.
But something that big, let's say 4 years ago, it would have been down 80%. So that actually was a
Okay.
positive
Hmm.
sign. It was only like 22%, I think, is the most it went down because of that. So I was expecting it to go down about 50% because of that. It didn't go
I
down that
understand.
much. So
Well, that makes a lot of sense. So it's like it's getting a little bit more resilient, right? Like
Exactly.
people understand how it's moving and it's not affecting it as bad. So now, because crypto or this market, right, was created to sort of be a deregulator and not, not be the same or be as I guess tracked as our regular banking system. Now with the crash of FTX, what I'm hearing you say is that regulation needs to happen so that these things don't happen, right? Like it did with
Yeah,
the market. Mm-hmm.
I think we need some regulation.
Mm-hmm.
I like light regulation. I'm not a big fan of like heavy regulation.
Right.
It's just a set of rules to keep things like this from happening, right? Maybe
Mm-hmm.
that, I hate to say it because I hate the SEC,
I know. It's like a
but
slippery slope, right?
I
Like
know you let them in a little bit, they're gonna take over, and
that's
it's
right.
almost like if you don't let them in a little bit, people are, you can't expect people to just be trustful actors, right? When they're dealing with that much money, it's
Mm-hmm.
several, 3 or 4 things have happened over the last 6 months. It was another one that Terra Luna, not Terra
Right.
Luna, but was it Terra Luna? I think it was.
I
Uh,
heard of Luna. I don't know
Luna.
if Terra Luna is the full name. I'm not
Yeah,
like
but what 6 months ago that was a big deal. Everybody forgot about that. So
hmm
things move on and people forget. But but yeah, it's a big it's it's a big thing. And I think we just need some regulation now. I don't know. I don't really don't know how much.
right.
Uh, but it has to be something. Or these every 4 years these bad actors come in and the booms
hmm
and they commit fraudulent acts every 4 years, man. And then somebody has to, the average person won't trust crypto if every 4 years, they got a 1 in 10 chance of losing everything, because
Right.
one person does, it's not going to be good for the market. So we need some kind of regulation just to make people, feel safe and secure in this
Yeah.
market.
Yeah. And I think that's the thing, right? That's the like stuck in between a rock and a hard place. Like we don't want regulation. We want it to be sort of the wild,
Exactly.
wild west, but nobody's trying to lose when it really comes down to it.
Yeah.
So then you're like, okay,
It's
there's
a
a
Wild West when you're winning. When you're losing, everybody screams for regulation.
exactly, exactly. So you think the market is gonna continue to do what it does in terms of the crypto market? It'll
I mean,
rebound
I,
from this.
I would expect, really, to be honest, over the next year or so, as people start giving up, selling, uh,
Mhm.
the excitement of crypto is going to die down. I've been through this twice before.
Okay.
It's even some conferences that are going on today that's nobody there, because all
Really?
the excitement is gone. And
Mhm.
I've been to conferences when the excitement is high, packed full of people,
Mhm.
cars outside, Lambos, girls dance, all this stuff.
Wow.
In
Mhm.
the bear markets, you're back to regular businessmen,
Mhm.
in blazers and just boring like a regular business conference, right?
Right. It's
That's how
not hype.
crypto is. It's not. It's completely night and day from when the market's hot and when it's cold.
Wow.
And I think we're going. I'm pretty sure we're going into like a 2 year period.
Okay.
Everything's gonna be cold like that again, and
And
that's
you
okay with me. That's what I build, and that's what I make a lot of my money is in the cold times.
mhm.
That's what I built a company in the cold times. I've done great investments. I made my best partnerships. All of these
Mhm.
during those 2 years when everybody's looking away. When everybody gets hot, I'm already in
You're ready up.
position to do well. Yeah.
That's
So
good. So I saw you posted something about Chase and how they did like a trademark of a digital coin or something of
yeah,
so tell me a little bit about that.
yeah. So they trademarked a wallet
Mm,
address.
okay,
But
okay.
that's just another example of like what I just said is that corporations, the lead, the rich, and the banks, they
Mm-hmm.
will they will they will build during these times. They've done it two
Right.
times before. When everybody else is looking away, the average retail consumer, retail investor is looking away. That's when they start building. That's when they built the infrastructure, hire employees,
Yeah.
figure out what they're going to do.
That this is my little conspiracy theory, right? That the banks basically play a part in these lulls. Even though you said it was
I
already
believe
written
it.
into the
Yeah,
code, but the way they move their money plays a part into affecting the
exactly.
price. They wait for it to come down, and just like you're saying, they do what they have to do to get in position because before it was too high and they weren't ready, right?
Yeah,
So now they have an opportunity to really build infrastructure, get the regulation because now people are going to buy into regulation and
they
it's
got
going
to
to work
slow
in
the
their
boat
favor.
down. That's what they do.
Mm-hmm.
Because corporations are very slow. They move like a cruise ship, very very slow. So
Mm-hmm.
they can't like a small company is very agile. It can move back forward. A big company can't do that. So they have to slow everything down. The one way they do that is negative news,
Mm.
getting you to look away, giving you to give up. Then they got a 2-year period where they can build up.
Yeah. Yeah, I definitely see that happening. And I feel like also in the stock market as well, because of the fact that, consumers were getting too either savvy or playing the game too well or had too much liquidity. So they're like, okay, things gotta slow down. So
Yeah.
I mean, it may be a little conspiracy theory, but I really do believe based upon what I've been seeing. So where do you think you talked about like now is the opportunity? Like where do you see the opportunities? Like what, you don't have to tell us what you would be doing, but like if someone asked you for advice, what would you say?
I mean, there's two ways, right? Is that
Mhm.
and I've actually helped a few people get into the crypto game.
Okay.
Uh because there's two ways you can get into crypto, right? And the lowest barriers to entry. One is invest in it when it's low. Just buy a little bit every week.
Hmm.
Invest in the coins, just wait for them to come back. The top five are always okay. The
Okay.
second way is you can integrate your business into crypto.
Mm.
For example, if you got
Okay.
a service product or something like that, maybe really services, you can like create a service to where you can, help people. And like I got a girl, a woman, I should say,
Hmm.
that she was doing PR and marketing. And I told her, look, I said, you could go to crypto conferences where the market's so new, it's so immature, is that you'd be an expert in that field if you just know a little bit about crypto. I
Mm.
said, take all the skills that you have in marketing, learn a little bit about crypto, marry those two together, and then just start going to conferences, handing out cards.
Hmm.
Because it's so new that, I mean, most people only been in it since 2 or 3 years.
Right.
You can catch up, in 3 months, you can catch up on knowledge. If you
Hmm.
really 2 months, really a month, if you really tried,
If you
you can
really
catch up on
focus.
knowledge to somebody that's been in an expert that's been in there 3 years.
Hmm.
And when you do that, now you got an edge on everybody else. Like, see, for
Hmm.
example, lawyers, like a crypto lawyer makes a lot of money when it's
Hmm.
in the hot markets. I mean, millions a year,
Hmm.
because there's not a lot of crypto lawyers. A lot of the lawyers that were crypto lawyers move away from it in the good time, in the bad times,
Hmm.
and there's only a few that are still there. So when the hot times come back, the people who left can't adjust fast enough, and the
Right.
people already there make all the money. And that's any kind of services like that, marketing, PR,
Hmm.
metaverse stuff. A lot of those things are wide open,
Right.
completely wide open.
So you're saying, for the average individual who's looking for opportunity right now to learn
Yeah,
as much as they can learn about these
learn
markets.
as much as you can and
Hmm. And
find a way you could fit into it, because the market is so new that anybody can be an expert. Anybody can be a big player in this movement.
yeah, I think, for people who haven't seen market cycles, they don't realize how much of an opportunity there is now or how new it is, I should say. Like we still feel like we've known about it for a little bit, but it's still so infant. Like you said, the stock market was 1929, right? And like
You know,
that's old, but we have barely hit 20 years, right? With crypto being alive.
yeah, and that's a good point. Is that like I said, things are very, very new.
Hmm.
And like for example, most technologies have an adoption curve of like 20 years.
Hmm.
Most technology, the internet was talked about in the early 80s, late 80s. It became like where the average person could use it.
Hmm.
Early 90s, the World Wide Web, the web pages that we use every day, started. I
Hmm.
didn't have a computer in my house in 2003.
Right.
And
Hmm.
I actually had access to the internet on a daily basis in 2000. Actually, I had access to the internet on a daily basis when I started college in 2000. That's when I
Okay.
first had access to the internet. And remember, what was the internet back then? It was
Nothing
linked
much.
to web pages.
Yeah,
That's
chat
it.
rooms and stuff
Linked to
like
web
that.
pages, chat rooms,
Mm-hmm.
right? And it evolved. Like right now, we're talking over Zoom on the internet. It evolved into something that most people would have never imagined
Right.
in those days. So crypto, if we look at crypto more as a technology platform, it's going to evolve into something that I don't even know, somebody that none of us could ever even imagine that it would evolve to.
Mm-hmm.
A lot of times you got to be able to see the power of the platform. Like most people couldn't see the power of the internet in the late 80s. Like, what is this? Like, who's going to go? Nobody's going to do this.
Mm-hmm.
Most people would look at it and say, this is boring. Nobody's going to do this. Like, why
Right.
wouldn't you just, go to the library? It's a lot faster, a lot easier instead of trying to figure all this out. Yeah,
Mm-hmm.
because the platform was powerful. And you got to expect users and the world to build on this platform. That's what's going to happen with crypto.
Yeah.
It takes a while for that to happen, 20 years.
Another thing, well, that's a great point. Another thing that I've noticed, so from like a year ago, like NFTs were really hot. I know it's like a form of digital, maybe not currency, but like, you know, digital platforms, or it impacts digital platforms or lives on digital platforms. But I haven't heard a lot about that now. So what has changed in that, in the NFT market?
So, like my personal opinion is the artwork
Okay.
that was NFT based. I think all of it's dead. It's never coming back.
Really? Okay.
Yeah, I just don't think. I always thought that, and it's a reason. It's several reasons. I think is because one reason, because the barrier to entry is way too low. Anybody can do it. Anybody. So it's gonna be. I knew the market was gonna be flooded pretty soon, and I knew that pretty soon the excitement, the values would drop, and then people would just lose their money. And I knew that from the beginning because every crypto upcycle, there's an exotic, like, way that people try to use the blockchain, and they say it's going to change the world, and they make money on it. It disappears, every single one. Right. NFTs was just this cycle.
Okay.
Right? So, and I knew it from the beginning because last cycle was ICOs. The cycle before it, there was the DAOs. You know, it's always something that people try to use it and, you know, make some money, and then a lot of people get excited, not understanding what they're in. It's almost like a, you know,
like a money grab.
Like a money grab. But I don't think everybody's in there is for money grabbing.
Right.
But it's the money grab is so big of an opportunity that everybody comes into it. It's too many people.
Yeah.
You know,
they're willing to take the risk for the upside, the potential upside.
The upside is so high. Like in the heyday of NFTs, you could make an NFT collection overnight. That's how fast you could do it. Wow. Overnight, you could, like if I stayed up all night with 4 of my friends, we could have a website, everything we needed to run an NFT sale up by morning. That's how easy it was. You know, and people did that, made a lot of money. Right. But it's something that I knew that it wouldn't last. Some of the NFTs may come back, like the Bored Apes or whatever, I don't know, but 99% of them will never come back because it's just too easy to get involved in it. Like maybe some of the ones with like Gucci put out a set, I think, and maybe some of those like that will stay around. But like I remember it was like a 14-year-old girl put out a collection, made $6 million. Wow. Like I'm happy for her. But I mean, that stuff like that, just nobody's gonna buy this, like unless she's a famous artist by then or something. Something else.
I was gonna say, I think the use case is really for people who have a following, and that way they can monetize that following, you know, like having exclusivity to certain things. Something I think like that's
but the problem with that use case is that this is the thing about technology. If technology has to solve a problem, if there's an easier way to do it, people won't use that technology.
That's true. That's true.
Like I said, is there an easier way to provide exclusive access? Yeah, there's a lot of them. So nobody's gonna go through the. I just don't believe nobody will go through the NFT process when it's a lot easier way, Eventbrite or whatever.
When you said that, it made me think about CDs. How we had CDs for when we look at history, for such a short period of time, because there was an easier way to do it that came right on its heels. So that makes a lot of sense. It may not allow it to last as long. So do you think that the future, so one of the things I wanted to talk about was like social, because I know you're big on social media and you have like a huge following and you've been seeing like different trends, you know, how social is moving. So I wanted to know, because I've seen that tweets and people's opinions have been affecting these different markets like extremely, I guess, intensely. What are your thoughts about that? And what does it mean for the market now if it could just be swayed that way?
I mean, the market always has been able to, I mean, the Federal Reserve chairman can come out and say something, or the president. I remember sometime, I don't know how much that was happening this time, but I remember back in like 2008, 2009, the president would be talking. Like I remember Obama when he first got in office, he'd be on the screen talking, and as he was talking, the market would be reacting.
Wow.
Like to what he said. I don't think that happens as much as it used to anymore. I don't know what had changed, but I remember that. Like he would say something, obviously it would drop. And then he would say it would go, it would like what he was saying. But there's always been, people have always had power to change. The Warren Buffett always has 20 years ago. Certain people could put out an article and that would change the market. So I don't think that's going to change. I just don't like, they shouldn't be like, it's the difference between giving your opinion and meddling in the market. You know?
Right. Yeah.
Like if you hold shares or something, or it's your competitor or something like that, I think that should be regulated more.
I agree. Yeah, I definitely think so too. Cause it's almost like insider trading, right? You know, something is about to
Yeah.
affect the market and you're benefiting from it. So um that's a lot of great insight. Thank you for sharing that. So I know you have some things coming up on the horizon, and I want to know like what's going on with you as you prepare in this particular market. One thing is that you definitely have a book coming out.
Yeah, I have a book coming out called The Strategic Millionaire.
Mm, tell me
And it's
about
coming out
that.
later next month,
Hmm.
right before Christmas.
Okay.
So over my lifetime, I've went down what a lot of people would consider to be a unconventional path toward building wealth.
Hmm.
Like most people, they either invest or they start a business, or they, and it's always one thing that gets them to wealth. Well, I've done a series of things
Okay.
that's been unconventional and normally like contrarian. Crypto early. I've
Mhm.
invested in a lot of trends, before everybody knew about the trend.
Okay.
I built companies early in trends. Uh, I've applied a lot of knowledge I've learned on, different business ideas, different, uh, enterprises I've done.
Hmm.
So all of these things I put in the book, and it's the 7 laws that the rich don't tell you, right?
Mm.
Because the rich people use these laws all the time. They don't tell
Right.
you. And I'll just give you an example. One,
Yeah.
it's like the poor people that are in poverty, people that are in middle class, are taught to work hard all the time, and that's how you become successful. You have to, and we
Mhm.
even have a lot of our culture is even hip hop culture, hustle.
Yeah.
2 phones. Kevin Gates. I got 3 jobs. I got 7 jobs. I don't get tired. I don't sleep.
And I
We
was like, how? How?
even our culture is filled with references of
Hmm.
people working hard. That's considered like a badge of honor.
Right.
But if you look at CEOs of major companies, if you look at a lot of very rich people, they don't work that much
Hmm.
because they have a lot of passive income streams, and they use other sources and other ways to create money. They actually avoid work
Mm.
because everybody on earth, everybody has 40 hours a week, maybe more, but 40 work hours, right?
Hmm. Hmm.
So I don't have any more than Jeff Bezos has. So
Right.
Jeff Bezos' hours, he has to be very jealous with them. He can't just give them away. He has to
Hmm.
preserve as many hours as he can and let these other paths and other streams of revenue work for him. And
Hmm.
that's what I teach in that book. That's one of the laws, is that you have to be lazy.
Mm.
And
I like that.
people say
That's a
lazy, that's something
right.
it flies in the face of everything I've ever been taught. But you have to be lazy, because a lazy person is normally more efficient. Now, that's not me saying that. Bill Gates said that.
Mm.
He said he would prefer to hire a lazy programmer because they're more efficient at what they do.
Wow, that's profound because sometimes when I guess I've been in business. I've had my firm for over 10 years. And so throughout my growth in that process, I realized that I had to delegate. And then once I delegated, I'm like, oh, I gotta delegate some more. And then I gotta delegate some more. And then I realized that the goal is actually to do nothing, right?
Remove
So
yourself
that
from
remove
everything.
yourself so that and not because you really want to be lazy, but that way your brain can function at its highest capacity and you
Exactly.
really can help the
Because
business.
you're the thinker. Thinking
Right.
is not, time dependent. You're coming
Hmm.
up with ideas. You're thinking, using all the knowledge you gained over the years to make these decisions. Now, the
Right.
decisions can be made in 3 hours a week. And
That's
you think
true.
about them all day. We think all day, think about new
Yeah.
ideas. All that could be happening 24 hours a day. And you actually sit down and you bam, 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 and walk out.
Yeah.
But that's what a good leaders do, is they move themselves from the equation altogether. And they're the thought person. They're the leader on
Hmm.
ideas, and everybody else executes.
Wow. That's dope. That's dope. So cool. So seven, say it again. The
It's
seven
the strategic millionaire.
strategic
Seven
millionaire.
laws the rich don't tell you.
Okay, that's awesome. I'm definitely looking forward to that. Where could people find it or tap into it?
So it's going to be at Barnes and Noble. It's going to be at
Awesome.
it's going to be on Amazon, of course. It's going to be, you can get
Okay.
it from my any social media account that I have. My website is going to be thestrategicmillionaire.com. You can get it from there. So there's a lot of avenues where you can get that book.
Okay, awesome. And are you touching on the different ways that you've made money as well? Like,
Yeah, so I touch a lot about, I touch on crypto. I
mm,
touch on how to trend cycles,
mm,
on how to predict what technologies are going to be good, invest in them early.
Mm,
We talk about emotional thinking versus rational thinking and how you
mm,
should more rational in your thoughts. We talk about being lazy. We talk about defining success for yourself. We talk
mm,
about different ways that we even talk about like uh, different ways to like position yourself
mm,
in certain markets. For example, we talk about a concept called the pick and shovel
mm,
strategy.
mm.
And and I'll go ahead and say, I don't know how much
I don't
time we
want
got.
you to give away too much, but give away what you
But that's
want
just a
to.
small thing. It's
Okay.
called the pick and shovel strategy. I'm not going to give
Okay.
it away, but I'll give away what the concept is.
Okay.
It's called the pick and shovel strategy. So in 1849,
Mm,
the San Francisco 49ers,
okay.
they're named after the people who came to San Francisco in 1849 to mine gold. There was a
Mm,
gold rush in 1849 in San
okay. I didn't know
Francisco,
that.
one of the biggest gold rushes in history. And so a few miners came to San Francisco and found large amounts of gold. It
Mm-hmm.
got in the newspapers nationwide that there was gold out there, right? So, and then the next wave of people that came in, it may have been like 100 first miners. There was 100, 50,000 people that came after that. Right?
Mm-hmm.
Of
Hmm.
course, the gold was depleted fast, right?
Right.
So, and then the next wave of people come. Next thing, you got all these people there that are mining gold, right? Now, the people who understood that trend cycle, you got the early adopters, you got
Mm-hmm.
the next people that come, you got the other people. When the first miners come, when they heard the news there was gold in San Francisco, they didn't come to mine gold. They
Okay.
came to supply the second wave that came after the people with shovels,
Mm.
pickaxes, food, and they were the second wave of millionaires.
Ah, I get it.
The first wave were the people who searched for gold, but they were smart enough to understand that the second, it's going to be too many people coming to second. Now, what do these second people need? They need shovels, they need support, they need
Mm-hmm.
laundry. Then those people came to set the infrastructure. And they the first people were the gold miners, the second people were the suppliers. They got
Mm.
on the supply side of things, and that's called the pick and shovel strategy.
Wow. No, that's really, really good because one of the things when I sort of talk about legacy is sharing like the information that you learn, right? The things that if you would have known, you would have done better or you would have, been more wealthy or whatever the case is. So you're basically teaching people the strategies that they need to recognize and see to be able to take advantage of the opportunities that are coming.
Exactly.
Wow.
So we talked earlier about providing services to crypto environment when it comes back. That's a pick and
Mhm.
shovel strategies that
Wow.
you see
Mm-hmm.
something on the horizon, you position yourself to supply the wave of people that come in for the excitement. That those people that come in at the last minute, they hardly ever make any money.
Mm-hmm.
Like when crypto, the stock market is hot in 2 years from now, when it's at its peak, those are the people who lose money. But they
Right.
come in, they need stuff. They need information. They need maybe like services. They need these things, and that's the second wave of people who make their money.
Mm-hmm. Wow, that's dope, Armando. I'm excited about your book. I definitely want to read it. And I think that's one of the things that people need right now, right? You need to be, like you said, educating yourself, getting information, positioning yourself. So this is going to be like a blueprint to help you,
Yeah,
kind of walk yourself through that process.
it's a good word. I'm going to use that blueprint.
Hey, you're definitely welcome to it. Okay, so everyone. So this is Armando, Tall Guy Tycoon. Make sure that you follow him. Where can people find you, Armando?
I'm on all platforms. Tall Guy Tycoon, TallGuyTycoon.
Okay, awesome, awesome. Hey, you guys know this is the Ambitious Legacy Podcast. Thank you so much for listening. Thank you for helping me be on purpose. And I'm going to see you guys next time.
Thank you.
All right.